Hi, this is Zak Mir with the Bulletin Board Heroes on Friday, the 30th of November here on Share Talk. Starting off with a request, Filtronic. Here you can see there's been the drift from that peak that we had at the end of September, likely to go down towards the 200-day moving average and this wedge floor there around 13.5 pence. Obviously it doesn't have to because it could just bounce there at 15, but the chances are that we will drift a little bit more, just especially given today's slight pullback and the falling 50-day moving average. At that point, hopefully the build from June will resume. Onto a stock which may be a bit more encouraging, Fastfwd Innovations. Here you can see that this looks as though it's breaking this falling wedge from August, and really the initial target here, the 50-day line at 10.68, and then on to possibly retesting that July peak through 16. Stop loss obviously back below 8 pence. Good bullish divergence in the RSI window as well, although I suppose the volume hasn't quite caught up yet, but a nice candle there for today. Stock which has been one of the better ones of this year in terms of reliability. Live company, here we can see the shares after the bear trap rebound from below the rising 50-day moving at 200-day moving average, rather, at 53.38. We've broken the 50-day line. And it looks as though we should hopefully have a bit more upside there, well above 60 pence. The view is that we could retest the best levels of the year towards 90 to 100 pence, hopefully by the end of the year if we're lucky. On to the next stock, which is one of the best stocks of the day so far, stock which is normally rather difficult and it's sort of spiky as well. Here we've got mobile streams breaking out of this falling wedge from August through the 50-day moving average as well. A bit of a stop-start situation. Obviously, we broke up, then went back into the wedge and then gapped up again. But overall view here is, I suppose, while we're above the 50-day line at 0.77 and that resistance line, there could be some upside here. Obviously, you can see the shares trying to fill that gap from July already. So if you like volatility and messy charts, that's the one to go for. Stock which was flagged by Align Research and others over the recent days has been Oilex. Here the 50-day line did actually come in and save the day for the shares, currently at 0.27 while we're above that. Looking for a retest of the best levels of the year to date, 0.7. Nothing really much between current levels and that particular landmark. I suppose the best case scenario here is that we head as high as 0.75 or 0.8, which is that resistance line there from August rather. Onto a stock which I think I covered a couple of days ago. Can't quite remember now, but Redx Pharma. Here we've got a possible falling wedge breakout here with the I suppose the line of resistance there broken earlier in the week from April, and the shares are attempting to break up higher now. Ideally, I suppose we get an end of day or end of week close above the 200-day moving average of 9.64, just to underline the fact that there has been the end of the bear run here for the shares. Silence Therapeutics is next after a rather painful period. This is another request, in fact. So we've got the situation where the shares have look like they're trying to bounce along the bottom of this support line there from June. Got a resistance line there running up at £1. So obviously a bit of work to do to break that, but maybe worth watching just to see whether we can get through the 80s and head back towards that 100 pence resistance line just below the 50-day moving average. Finishing off with a happier situation comes in the form of Webis, and here try to shy away from looking at the stock actually, but looks as though this little bull flag consolidation and breakout that we've had with the rising 200-day moving average is actually quite a strong one. Vertical move now above the 200-day line and breaking above, end of day close above this old July peak leaves the shares really with no real barrier to retesting the best levels of the year to date at 8 pence plus. Stop loss at the moment back below the 200-day moving average at 2.39. That's it from me. More updates on Monday.